Mortgage rates have gone up 0.25% in the past week, and this has been putting a lot of buyers on the sidelines who are waiting for better market conditions. And I want to talk this through specifically with today's market update. Now, the reason that rates have spiked up so much is right here on our screen. The 10-year Treasury has absolutely spiked in the past couple days. It had been going around 4.45, and now it is approaching 4.6%. We have absorbed a lot of this market volatility at Chevy Chase Financial. So our FHA, USDA, and VA rates are still at 5.75% with no points. However, conventional has gone over 6% with our no points option. However, with one origination point to buy down the rate, we are still seeing people getting under 6%. Now, temporary rate buy downs of 1% for the first year are available at no cost for clients who plan to buy right now and refinance when the rates go down. So that's a big tool to keep in your back pocket to keep buyers active even as rates go up. But what actually happened with the 10-year Treasury? Well, the 10-year Treasury rose a lot this week, and it's put a lot of upward pressure on mortgage rates because mortgage rates closely track the 10-year Treasury. Bank of America had stated that strong payroll data, the CPI report, and the upcoming Fed meeting could drive those yields higher. And the reason for that is that when investors are getting greater returns in other investment vehicles, the rates for bonds have to go up, and that drives up mortgage rates. So what we're waiting to see is whether inflation will either cool down in the next couple months, driving rates down, or whether some form of quantitative easing where the Federal Reserve buys mortgage-backed securities could artificially drive down those rates. Wall Street Journal and Bloomberg are noting the same thing. They're talking about sticky inflation, which means just inflation that has momentum that's hard to undo regardless of monetary policy. And again, they reference the strong growth driving investors away from the treasury bonds and into other forms of investment. I'm happy that the loan products that we are offering for the most part are under 6% with no points, and I'm happy that we have the 1-year buy down to help buyers get off the fence. But we're all hoping for better market conditions in the near future, particularly those of us in the real estate industry. So any questions that you have, we follow this stuff daily. Feel free to reach out to us here at Chevy Chase Financial for any estimates, and hopefully we can get some buyers to purchase now and not wait until rates go down, because we all know that when the rates go back down, it's going to be a feeding frenzy in the market and maybe not the best thing for those buyers. Anyway, hope that's of value to you guys. I'll see you all in the next video.